Hello everyone and welcome to the Sygnum crypto live stream. Today I'm not alone, but actually Tom Castley is joining me for a quick Q&A session about recent crypto events.
Fantastic, thank you, Martin. So we'll talk today, I think, firstly about how last week's events might impact the evolution of the crypto space, and also what's in store for investors evaluating crypto in the run-up to Christmas. As always, today, however interesting, everything is not investment advice. It's for educational purposes only. But Martin, first, let's start with what you called last week a remarkable week in crypto. So please, do you want to walk us through the headlines from your point of view?
Yes, thank you very much. Well, remarkable in different ways. I think first, of course, remarkable because of the positive price action that we saw. But I would say most remarkably, definitely news of Binance settling with the DOJ for 4.3 billion. Big numbers for the crypto space, really exceptionally big. And also then we see that the SEC actually also started investigations of Kraken, which so far actually was, I think, less on the radar of the regulators, and I think also remarkable. And I watched it live when we had this DOJ announcement. I mean, you can see, Miss Yellen was there, so you can really see this is not just a side topic for the US, but it's on the top of the agenda. And also I think remarkable to say that you could see that different regulatory authorities are competing about this number one space, going against the crypto players. And I think they celebrated this and also said it underpins the leading position of the DOJ to regulate crypto, which is a bit a sidekick against the SEC. So you can also see there probably a bit behind the curtain that the heat is up.
It is up. So zooming in then behind the curtain, as you say, what do you think are the main issues that crypto exchanges might be facing during this period of regulatory tightening?
Well, as I say, there is a regulatory tightening, I think, which is not a surprise. I mean, I think industry experts, also including ourselves, we anticipated this a long time ago. And I think the challenge that they are facing is just they probably started implementing some rudimentary KYC checks, but of course regulation is much more than just taking a selfie. And probably the biggest challenge that they have is to transition the existing user experience and the existing platform into a fully regulated one is incredibly difficult, because you potentially need to repaper all these customers. You probably need to do significantly more checks, and the user experience will deteriorate like significantly, right? Suddenly someone needs to look at all the transactions. And then I think many will then also ask themselves the question, well, if it's the same experience that I have with my bank, what's then the advantage of still using an exchange, which probably in terms of the regulatory recognition, the standing is not as good as the bank. And I think this will be a challenge. And I think just also, I mean, seeing how difficult it is to actually, I mean, run a regulated business, to transition non-regulated business into a regulated business, I think is operationally very, very challenging.
Yeah. So certainly, after we've had some time over the weekend to reflect on these events, what do you think this actually means for the crypto industry long term? You know, and how might this evolve the landscape, particularly in the US?
Yes. Well, I think for me, and I think this was also the market reaction was, I would say, neutral to positive. This would also be my reaction. I mean, I think it's good to see that they are willing to cut deals. And probably what I was worried about most was that we see similar events like FTX, where you basically wake up and you realize a certain exchange doesn't operate anymore, or is not allowed to operate anymore. And I think a lot of this uncertainty, like a big blow up uncertainty of any player, not mentioning any names, but I think this was what was keeping people awake at night. And I think we now see, if it's win for the DOJ to announce we actually got a very substantial amount of money, but also win for an exchange. Okay, we are allowed to continue doing business. just of course with certain restrictions. There is a deal, and this probably means that this explosion or implosion risk is significantly less than actually 10 days ago. And that's, I think, very, very positive. So it's probably more a mid to long-term shift towards more regulation, but not like an implosion, and then we start from scratch with regulated players versus less regulated players.
So at Sygnum here back in 2017, there were 3 bets made with the co-founders. One bet was on Switzerland and Singapore's heritage as a quality financial hub.
Good one.
A good one so far, yes. On the second one was certainly on the meeting of talent and capital, and a powerful technology to create what we call future finance. The third is maybe what we can talk about here is the bet to be fully regulated from day one for any transactions are made. Can you please talk about this last bet and how you think this is going to shape our journey so far?
I think it was a very interesting decision back in 2017, and really the majority of the players were largely unregulated. And I think also I remember when we went live with our platform, of course, many players, but no one asked me this question before, like, why do you, for example, screen all the transactions when I actually send crypto to the bank? And I think now we see that this probably turns into a bit the role model of the whole industry. So I think it was very, very much forward looking. And I think also, like I said, the challenge is, I think, to build a regulated business from scratch without legacy is significantly easier than to transition an existing, not fully regulated business into a regulated business. So I think this was a very smart decision, and is now also really a role model, I think, for the industry. We see that, of course, more regulated, more institutional players are entering, like with the BlackRocks, with major banks entering the space. So I think this is now probably the beginning of really this trend of more regulated players offering crypto.
So switching to Bitcoin, its narrative of being a safe haven, probably, if anything, has been enhanced over recent periods. Is there such a thing as a safe haven institution, and what should investors look for beyond the pure institutional security of their funds?
Well, I mean, ultimately, it's of course a lot about security, but I think security has many different aspects. One aspect is, like, for example, counterparty risk. I think we saw it with FTX. So I would say make sure that it's bankruptcy remote. I think when it comes to the secure funds, it also comes down to, for example, choosing between self-custody, where you then need to have respective backups in place and security control, versus actually choosing a central custodian. And I think when it comes to a really secure institution, of course, Sygnum is clearly a leader there. But I think we are not the only one, because I think we see also there are more institutional players emerging in the space. But for me, I think bankruptcy remoteness, then of course, a secure IT architecture behind. And then I would also pay a lot of attention to actually the regulatory standards when it comes to AML that these institutions adhere to, because I think this is in the long term one of the key factors which then differentiates probably the best players from the average player.
So as we look towards the closing of the year, this might not be your last words on the matter, but what are the key things that you think investors, both activated investors and those evaluating market entry, should be thinking about as the end of the year gets a bit closer?
Well, I think very short term, I would think about that December historically has always been a very strong month. Actually, I think if you look into this year, we saw that this year is very much a year where we see these seasonality patterns, which you observe in crypto actually holds quite well. So it could be interesting to enter the market short term. I think mid-term, what you need to look for is well, definitely the Bitcoin halving, which you should
Yes.
have an eye on. Shorter term Bitcoin ETFs. I think it's imminent that an approval is coming, and that's definitely also something to look for. Whether it's then positively received by the market or whether it's buy the rumor, sell the news, we will see. But I think it's something to really have on the radar and see how fast these flows are ramping up from the institutions. And then I think also overall, the activity on the different networks. I think we now saw that, for example, a lot of activity returned to Solana, quite a bit on the layer 2s. I think many layer 2s are also about to launch, which try to solve this trilemma of blockchain. And I think that's for me also a key factor to watch out for, because ultimately we saw, of course, there is always like a spark which is needed, which may be the ETF, for example, but then the spark actually drives traffic on these different, and this traffic then leads to the increase in value of cryptocurrencies. I think there, yes, the winners of the last bull run, except Bitcoin and Ethereum, are not necessarily the winners of this bull run. So I think choose your horses wisely.
Choose your horses wisely. So, but thank you, Martin. Interesting as always, and thank you everyone for tuning in. Also, much gratitude for all of our followers who enabled us recently to get past the 30,000 mark on LinkedIn. But if you're not connected to us here, please do so to keep up to date on our news, events, research, and all of our thought leadership. And please always visit Sygnum.com for more information. So thanks, Martin, and thanks everyone, and bye for now.
Thank you. Bye-bye.